Welcome to OJ Explain Money. Please note, this content is for educational purpose only. We provide news and facts and not financial advice. Always do your own research, consult a professional before making any investment decision. Welcome to our comprehensive market wrap for Thursday. It was another remarkable day on the Dalal Street, where the Nifty climbed to 25,000 mark, and it's due to the strong domestic support and steady global optimism, which fueled the today's rally. Next comes the market. Next, we will check on the today's highlight. The market breadth remained balanced in Nifty, where 1,541 stocks are at positive and only 1,516 stocks are at negative. Trading volume remained healthy with the sustained institutional interest across the sector. And in rupees, INR closed at 88.44 against US dollar, hitting a new record low. It's not a great news because ultimately the input cost will be higher. Next, we will check on the positive news. First momentum is building on the India-US trade front. Commerce Minister Piyush Goyal confirmed that the first tranche of trade agreement could be finalized by November 2025, and it's a great boost for the export-driven sector. After this agreement, there are chances that the tariff will get reduced. On the domestic side, GST rate cut benefits are now reaching a consumer, and you could see in the couple of ads that I saw yesterday on Hero, where they have explained all the vehicle and its price cut from Splendor, like they said 6,000 or 7,000 price cut, and it extended up to 10,000, even more, like 26,000. It's the highest rate cut I saw on the Hero. And on the Maruti also mentioned we will pass all the GST benefit to the consumer. It's a great news for the auto sector, but still there are concern remains on the people purchasing power. But as the festive seasons are around the corner, we can expect the demand get increased and the auto sector reaches a new high. Next, we will check on on the domestic and on the GST rate cut. Not only auto sector, the consumer sector also have the general positive, and they are expecting a 2 to 5% earning uplift across all their consumer durable. And due to this rate cut, the Hero is the one that gained 1.5%, but on total, the auto sector is declined by 0.33%. Next is a global tech. It's played a mixed response today, and whereas the Oracle surged by 36% due to the AI contract, but the Apple is declined by 3.2%, which is a mixed response. But as the contract is growing, we are expecting like the IT will perform better, and due to the Fed rate cut expectation also, we are expecting that IT will perform better. And on due to the Oracle news, one of the Indian stock which are highly benefited is Oracle Financial Service Software, which is related to the parent company Oracle. So it got benefited, and yesterday it gained almost like 10%, but today it declined slightly by 0.5%. Next comes the sector leadership. Sector leadership was clear today, whereas the energy gained by 1.27% and PSU Bank added like 0.97% and media advanced by 1.02%, reflecting a solid risk on sentiments. And as the energy gained by 1.27%, we see like Reliance rose by 0.42%. And on the PSU Bank, the State Bank of India claimed by 0.97%. And on media, TV18 broadcast surged by 6.5%, outpacing the overall media sector gain of 1.02%. And finally, the institutional support continues. It's a savior every day. It's a savior on entire September, I can say. And due to their buying, and today, their buying had mainly impacted only the Reliance industry, where it gained by 0.42%. Next comes the negative news. And first on the negative news is the pressure on the IT sector, where IT is slipped by 0.66, and mainly due to the margin concern and also the tariff concern. Due to this, the Infosys are dropped by 1.38%. Currency market also made the headline because the rupee hit the record low, and it raised a serious concern on input cost, inflation, and also the FII inflow into the Indian market. Next on the global front, tech signals were mixed. Oracle surge offered optimism, but Apple, as I already said, like Apple declined by 3.2% for the fourth consecutive days, and it kept the uncertainty alive on the IT-related stocks. And in auto, disappointment lingered. Despite GST-linked price cut, the overall sector performances fell by 0.33% today, pointing to the ongoing demand worries. But automaker stocks like Hero MotoCorp showed a modest positive, most probably due to its valuation. It's a cheaper stock. which have a lesser than 25 PE, I guess. Suppose if you know the exact PE, mention it in the comments. Next comes the global economy. On today's global economy, the US market, it's a mixed, whereas S&P is up by 0.30 percentage and dropped by 0.48 due to the Apple weakness, and Nasdaq gained marginally by 0.03%. Next, on the Asian market, the Nikkei surged by 0.68%. It's mainly due to one stock, which is SoftBank, which rallied by 10%. Yesterday, we saw the Oracle Finance in Indian market rallied to 10%. And today, the Nike, at least for Oracle, I know the background. It's due to the Oracle, the parent company, Oracle had gained AI cloud infrastructure project. But for this SoftBank, I don't have the details. Suppose if anyone know the details, also add it in the comments. If you want this detail on the tomorrow session also, please add it in the comments. I will try to get the details for you. While Hang Seng gained like 1.01% on the tech momentum recovery, and on Europe, DAX declined by 0.36% on being cautious about ECB policy, and next the FTC fell by 0.19 due to the commodity sector pressure. Now it's time to wrap up with the key takeaway and risk. There are three key takeaway. One is momentum is intact because it's a 7th straight gain for the Nifty, and it is reclaiming about 25,000. And there is a sector rotation happening. You could see like PSU and energy gain today. So the money are moving from to PSU, banks and energy sector. Next, there is a trade deal catalyst. India-US agreement progress, which we saw. They are planning to have an agreement by November 2025. So it's a good news for the export-oriented sector. Next, there are two checklists that I want to mention it over here. It's a risk checklist that you have to keep in mind. One is the Rupee vulnerability. Rupee is reaching its all-time low. So there are two important concerns. One is input cost and another one is FA inflow into the Indian market. Already the FA was selling all through the September as I see. Next comes the IT earning uncertainty. Infosys buyback decision and sector margin are under pressure. So we know the IT sector margin is under pressure due to this AI boom and the cost cutting is happening across. Even on the TCS, we saw there is a job cut of almost 12,000. Even in other companies also, there is a job cut that are happening in a silent way. Whereas TCS straight away said to the news, but other company had not mentioned their numbers yet. But according to my knowledge and whatever I hear from around, so there are job cut happening across all the IT companies. And this is mainly due to the valuation concern and some people are not market ready, and so all these things are putting pressure into the Indian IT stocks also. So always review, always keep this as a risk concern while you are investing in the IT stocks, in any of the Indian IT stocks, irrespective of it. I don't want to mention any specific name, but you can also find some better valued stocks which are less than 20 PE also. If you find something, you can have a look, but also check on the other perspective, like how the management is, and if to read the balance sheet and come up with a good approach or the momentum for it. And thanks for watching the video. If you found this briefing helpful, smash the like button, share it with a fellow investor, and don't forget to subscribe. I am always open to the feedback. Please provide your valuable feedback in the comments. Thank you.